Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Shawn Cruz, director of derivative strategy with TD Ameritrade, to discuss the March reading for the Investor Movement Index. The IMX is TD Ameritrade's proprietary behavior-based index, aggregating Main Street investor positions and activity to measure what investors actually were doing and how they were positioned in the markets. And Shawn, for the month of March, we saw that there was strong buying interest. However, it was below regular levels. Explain to us what happened for the month of March.
Yeah, so every now and then we get these nuanced readings out of the IMX, and it's important to note it's a little bit of a read on sentiment in terms of how aggressive or how risk-seeking some of our investors were if they did go out there and trade. So although we saw some net buying overall from the population of TD Ameritrade clients, they were buying some of the more low volatility, some of those safer areas of the equity market and getting out of some of the more volatile areas. So it was a little bit of a rotation that we saw out of clients, and it was a little bit of a retreat back just in terms of not getting out there into some of those riskier, more volatile names.
Yeah, Shawn, it's so interesting to see just how quickly sector rotation is occurring at this point. So you had pointed out we're looking at financials, consumer discretionary, industrial sectors. Give us an overview of the top stocks that were bought.
So it was interesting in what we saw where there was purchasing going on. It seemed like a rotation into some of those just blue chip names that you know and use every day. We saw JP Morgan was a top purchase. We also saw Amazon was out there, had a lot of buying activity, as well as Tesla, Microsoft, a few other of those tech names out there. But by and large, they were going into financials, consumer discretionary, and where they were buying in some of those other sectors, it was in those names that are a little bit more of the household names that we know, not going out there into maybe some of the frothier parts of the tech market or anything.
Right. And on the flip side for the sells, we saw energy materials and information technology. And Shawn, of course, no surprise with energy and materials, with the significant run up that they had as a result of what we're seeing with Russia and Ukraine, and of course with inflation.
Yeah, and I think that was where the volatile nature of some of these markets came into play. Commodity volatility, I would say, was something that really was a staple of trading activity in markets in general, at least to start the month, where you had a massive run up almost across the board in every commodity out there, and then a pretty dramatic pullback as well. That volatility drove a lot of those materials and a lot of those energy individual names higher along with it. And it looks like what we saw was a little bit of a rotation where there was profit taking in some of those volatile energy and materials type companies, and they were taking those profits and then they were putting them into some of those names that we see are typically popular holdings for individual investors, just by and large, no matter what time period you're looking at. But they took the opportunity to take those profits and some very strong performance in those sectors and put that to work in some of the names that we just mentioned from the buys. So we saw ExxonMobil, Chevron, Nucor, Cliffs, Natural Resources. We saw a lot of those companies getting sold, and it looks like the cash they generated from those sales was put to work in other areas of the equity market. But like we said, less volatile areas, and that's why you saw the IMX reading tick down a little bit for the month.
So Shawn, when you think about what investors are paying attention to as we get through the month of April, of course, geopolitics and what's happening from a macroeconomic perspective, but we're also getting to earnings. We're going to get into the thick of earnings starting in second, third week of April. And I think we saw this towards the end of fourth quarter earnings season because of what's happening with inflation and geopolitics and so forth. Being able to give effective guidance going forward, and also makes you wonder if they're going to start to pre-announce, because all these things that are happening are going to start to impact supply chain, input costs, margins, and so forth. What are you going to be looking for as earnings season dials up again?
So looking at what we're going to see leading into earnings season, which we sort of get into the meat of that, or the real kickoff, is when the banks report here in about 2 weeks. But I think what we're going to be looking at leading up to that is seeing a lot of analysts come out and start adjusting their targets, both price targets, their earnings estimates, their revenue estimates, and more importantly, their margin estimates for a lot of these companies. That's what we're really going to want to hear from management, is how they're managing this difficult environment for sourcing, because these supply chain issues used to be maybe focused in a backlog at ports, getting the goods actually off the ships and unloaded and dispersed, versus maybe sourcing very specific products, say semiconductors. But now it has gone so far upstream, it is at the core base commodity level, which really doesn't spare anyone further down the pipeline. So investors, doesn't matter what sector you're in or what company you're looking at, you're going to want to see how the management of the company in question is managing this difficult environment. And I think it is really going to have some implications, particularly for the margin side, not only in what is reported, but just like you alluded to, what kind of guidance they're able to offer, because it is such a volatile market. It's hard to give any sort of guidance that isn't either extremely broad in terms of where it could or couldn't go, or if they're just saying, here's what we're going to give, but we really don't have much faith in this because the situation is developing day to day. So I think there's going to be a lot that we're going to watch leading into that. It's going to be coming from the analyst side, but what we hear from management as we start getting these reports coming in, I think certainly can reset some expectations out of the market and drive volatility.
All right, it'll be interesting to see what happens when we speak again in May for the April IMX results. Shawn, appreciate the guidance as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.